Another week has come and gone. Greetings to our subscribers and welcome to our new friends. Now that pumpkin spice lattes are flowing freely in the Northern Hemisphere, that can only mean one thing: trading with a fuzzy robe on. Unless you're in the Southern Hemisphere where it's getting warmer and trading out on the balcony is perfectly acceptable. This week, we've got an indicator with a very high level of cool attached to it. You may raise an eyebrow as well. Let's carry on, shall we? So far, we've received good feedback on our change in data stream gathering methodology. Where we used to record 8 hours of live data on the 1-minute time frame, we now record a year's worth of past data from our platform, complete with the indicator in all its glory for a daily chart representation for all of us swing traders. Last week's data gathering efforts yielded 2 years because of the nature of the slow default setting of the indicator. We'll go back to a year's worth for this week and see how it does for us. This week, we're highlighting an indicator which is classified as a below chart, single level cross, volatility indicator. We're going to introduce this week's indicator and then provide a short educational moment so we're all on the same page. The Williams VIXFix was developed by none other than Mr. Larry Williams in 2007 and based on what we know as the VIX, or the Volatility Index. Those of you who are not quite sure what the VIX, or Volatility Index, is, we're going to break it down for you. The VIX is a real-time index introduced in 1993 and belongs to the Chicago Board Options Exchange, CBOE, which measures the 30-day forward market expectations for near-term price changes of the S&P 500 index. What this means for us retail traders is a way to gauge how much market volatility or interest is in the market. The higher the number, the more we like it. As no-nonsense Forex traders, we use this tool as the primary gatekeeper to determine if sufficient volume exists for nice trendy trades. We like to see the level of about 8 or more for decent trading volume. Without repeating the contents of the entire blog, we'll just highlight the fact that the Williams VIXFix is an MT4 synthetic adaptation indicator of the VIX, which can be viewed on your chart for an immediate insight to what the market is currently doing. We've included an image demonstrating how the indicator and the index compare with regard to levels. Pretty decent, if I do say so myself. We'll make a few comments alluding to chart expectations before we get started so you know what we're showing you. We made a few changes to the default view and added some components to better illustrate how to use this indicator. This includes a threshold level to provide a single level cross where the go or no-go happens, as we do with other volume and volatility indicators. We also added a simple moving average line with a period of 20 to provide us with a long and short signal, because you can't test a volume or volatility indicator without comparing it to something. It can be whatever you want, but we're going with super simple for our purposes. The details of the changes are itemized in the blog if you're not crystal clear on what we did and how we got there. Traffic was busier this week with regard to emails. We received an indicator idea from a resourceful guy who developed his own indicator for TradingView. If you're out there, Kyle, see if you can get it converted to MT4, and we'd love to check it out for profiling purposes. We also wanted to give a shout out to Neil, who has become a valuable contributor, and of course, the guy who got us started down the Larry Williams path, Dennis. Because of Dennis, VP and I burned up a lot of cell phone minutes this past week, and it may turn out to be a good thing down the road with some additional goodies from Mr. Williams. So, thank you all. And please continue sending us those saucy suggestions to our indicator address at stonehillindicator@gmail.com. All right then, let's get the video going. Remember, we made some changes and added a couple of components so it won't look like the default setting once you load it up on your chart. Just to remind you, we'll be looking for price to cross above or below the simple moving average first to provide us with the trade signal, then check to see if we have sufficient volatility down below before we pull the trigger on the trade. If that sounds confusing, don't worry. We'll be describing it step by step as we go along. Get ready, get set, kick it into gear. Okay, we'll start here. Let's zoom in on what we've got so everybody's looking at the same thing and newer traders are right there with us. In this first slide, we're looking at price crossing above the simple moving average line. Remember, the trade signal comes first. Now the question remains, is there enough volatility in the market? Now we look down at the VIXFix indicator and confirm that the signal line is in fact above the threshold, so now we have our green light to take the trade. Oh, and one other reminder. You can remove your volatility or your volume indicator once you are in a trade to clean up your charts because you do not use volume or volatility indicators as exit indicators. Let's continue the data stream and see where this trade takes us. That was a very nice run to the upside, lots of pips there. So now we've got a short signal and we'll look down to see where the VIXFix is. It looks like it's above the threshold, so we'll consider that a valid entry signal for journal purposes. Well, that was a quick loss, and now we have a fresh long signal. So we look down to check the volatility indicator, and it's below the threshold level, so no trade. Keep watching. Alrighty then. We didn't catch any of that move to the upside, but we've got a new short signal with confirmed volatility. Let's saddle up and see where this takes us. Okay, not too bad. We scored some pips on that short trade. We've got a long signal but no volatility confirmation, so we'll wait this one out. And right away, we get another short signal with confirmed volatility. And we're back out with a quick loss. No long trade here because the volatility is below the threshold. Let's keep going. We've got an interesting moment here, an educational moment. We have a short signal, but volatility is below our threshold line. Let's see what happens. Let's pause. What we have here is an agreement 2 candles after the initial signal. What does that mean for you? You can wait one more candle after you get a signal from all of your indicators. In this case, we may have had other indicators confirming the short signal, and we just needed to wait for volatility to catch up within one candle of your last confirmation indicator. So, while we can't know for certain since we are not looking through the algorithm lens, just keep that in mind. Just for argument's sake, let's assume that we have a valid entry signal with volatility and see where this trade ends up. This would have been a successful trade. We've got a new long signal, but no volatility confirmation. We've got a bit of a messy market here with mediocre volatility. This is where having an algorithm may have kept you sidelined until things were in agreement. We'll watch this for a moment more and see if we get anything after that quick price jump. Now we've got a clear short signal with obvious volatility. This could be the one to end our video on. Let's go. That was a great move to the downside. We've got a clear long signal with no volatility, so we'll ignore it. And we're right back in on the next candle for another short trade. Yes, sir, that's the one. Look at how volatility was consistently over the threshold, and the downward power curve of price just reinforced that last short move. In fact, you'd still be in the trade. Was this helpful? While it doesn't quite fall into the normal volume and volatility category as far as indicators go, it definitely has some possibilities, and it certainly kept us busy. What would make an interesting research project is to see how it correlates to another indicator of a similar nature and determine how they compare and contrast. Naturally, your personal level of volatility tolerance will dictate the threshold level. As for what we discovered in our tests, we noticed pretty good numbers across the board, which tells us that this indicator can be useful if tweaked a bit. The blog has all the results if you're interested to see the specifics. When you're finished watching the video and reading the blog, pop on over to the indicator library on the website and grab a free copy for yourself. Don't forget, the default settings will need some adjustments for better visibility. We think you're all top shelf, but we just can't give you any financial advice. Besides, that would negate the whole teaching you how to fish, farm, or trade metaphor and leave you stranded with no way to fend for yourself. You can do this. Even those of you who have written to us asking for help, we have ways of making the process less painful and much quicker. When we're finished here, immediately head over to the Stonehill Forex website. We have free resources, blogs, tools, and a kick-ass trading opportunity with Blueberry Markets for non-US traders. Of course, we have the only licensed and approved course which teaches you the no-nonsense Forex methodology. We spent over a year and a half putting it together from over 80 hours of material and crushed it down to a 10-hour condensed and organized self-paced course you can do over a weekend. Don't forget to sign up for the periodic digest we put out each month to learn what we're working on for you. You can sign up right on the website from any of the blog pages or just click on the email list tab at the top of the page on our website. If you want to get the most recent digest, email dan@stonehillforex.com with the title Latest Digest Please in the subject line. You'll have it within 24 hours. We're also on Facebook, answering all kinds of Forex questions on Quora, and of course, generating more helpful YouTube videos on our channel. Come on over and browse the site. We think you will like what you find there. Our only goal is to make you a better trader.